gap coverage. And this is true gap coverage. This is not multiple supplemental insurance policies pulled together to cover out-of-pocket expenses. So gap coverage. So if you've watched any of my videos on major medical health insurance in particular, this is good to follow up on. So, or if you've ever talked with a broker about your major medical, your health insurance, you have a deductible, you have a coinsurance, you have a maximum out of pocket, right? So let's see if I turn around here. So maybe this will be helpful. Okay. Let's just say, for example, you have a plan. Let's say you have a, let's say $3,000 deductible. Okay. You might not even be able to see that because it's all backwards, but you have a $3,000 deductible. You have a coinsurance of 80/20. You have a maximum out of pocket of $4,500. So if we just looked at, a lot of times what people get hung up on is just like what their deductible is. But the true number to look at is this one. I abbreviated it MOOP, maximum out of pocket. So your annual maximum out of pocket, what you could be billed for a given year on your health insurance, right? So this is the process of your major medical health insurance if you have one, if you have a plan. What you get is your deductible. So let's say something happens where you're gonna have a bill big enough to where you're gonna hit your maximum out of pocket. Let's say $10,000. Say you get a bill from, you have something happen, you are in the hospital for a few days, you get a bill of $10,000, and that could be super low because hospital stays are very expensive. What's going to happen? You will first be charged by the total the first $3,000 are completely on you, 100%, just like car insurance, right? If you got in an accident or something broke into your car, you have that deductible that you have to pay. Same thing with health insurance. You have this $3,000 deductible. Then you'll have your coinsurance, which again, it goes deductible, then coinsurance. Coinsurance means once you've hit your deductible, now your insurance carrier will start pitching in and covering a portion of the cost. In this scenario, I did a gold plan, which is 80/20. So that means health insurance is paying 80, you're paying 20. Now your bill is 10,000. The first 3,000 is on you. There's 7,000 left on the bill. Insurance is going to cover 80%. You're going to cover 20% of the next 7,000, right? So eventually what's going to happen is you're going to hit the maximum out of pocket on that. Okay. So you're going to get to a point where in that year, you've been billed $4,500. The benefit of having major medical health insurance, even, I don't think 4,500 is great, is that if your bill was $1 million, the most you could pay is what your maximum out of pocket is. So when I'm consulting clients on their health insurance, the first thing that I really want to make sure that is understood is deductible, coinsurance, and maximum out of pocket, but most importantly, maximum out of pocket. Because if we're thinking worst case scenario, you're probably gonna hit the maximum out of pocket, So it brings me to my actual point of the video, which is gap coverage. So a lot of times, and maybe this is brand new information for you, if you're a business owner and you're just learning, or you're going, okay, it's gap coverage. It's really as simple as it sounds. It covers the gap. So one of the carriers that I use, you legitimately just get a card that will cover the first $5,000 of your out-of-pocket costs for the year. So you don't need to worry about your coinsurance and all that. You have a plan that covers you for $5,000, and you could even lower it to $4,500. So that you're not paying extra, because once you're at 4,500, your health insurance pays the rest. But some people who have a lot of money, they don't care. I still think it's stupid to not care, because why would you pay 4,500 if you don't have to, if you can get a cheap insurance plan that you can easily afford? But to them, it doesn't matter as much. But to average working class Americans, having to pay 4,500 bucks is still a lot of money on top of health insurance premiums that are already super expensive. That doesn't go into any of those, deductible or anything. So essentially, the gap coverage is it's first dollar coverage, and it covers the gap that your major medical plan does not cover. But that $4,500 in this scenario. Now, traditionally, gap is kind of a newer concept. And I actually exclusively run a gap and wellness program that I'm very excited about. We promote it very heavily here, but I'll talk about that in other videos. Typically, supplemental insurance was gap coverage, but it wasn't called gap coverage. You had accident insurance and hospital indemnity insurance. My issue with those, and why I've made the switch to really promoting more gap coverage, is because I can't tell you how many times I'd have clients that got sick and only had an accident plan, and they couldn't claim any benefits and still had to pay all their out-of-pocket costs. Vice versa, have had clients who had an accident and all they had was hospital indemnity, which it still covered a portion, but it was more mainly meant for sicknesses, like overnight stays in the hospital. This person, had a broken leg, had surgery, but was out the next day. But if they would have had the accident and hospital plan, it would have been a much better program to be on. That's kind of the case. Gap coverage, you don't have to worry about that. Accident or sickness, it's all covered under one, and you're paying for one plan instead of two, and having to double up on that. So I'm a big fan of gap coverage. The only other supplemental plan that I recommend, or at least would say take a look at, is critical illness. In this case, a lump sum in most cases, but I'll talk about that in a later on video. Lump sum coverage and critical illness coverage, and why it may still be a good idea to add that if possible. But to keep things as simple as possible, when you have major medical insurance, you owe a certain amount of money before your health insurance kicks in. And then even when it kicks in, you still have to pay a percentage up until you hit your maximum out of pocket. With a gap plan, you won't have to pay, or in most cases have to pay, a dime of any of those first dollar costs. And so it's true coverage. People always say, hey, am I covered? Does this cover me? Well, you have the insurance, but the first $3,000 in this scenario is on you. So it depends what you mean by, are you covered? You're covered after this amount, after you've paid this much, right? So it's such a simple concept, but with terminology and health insurance, it seems easy for me because I talk about it every day. But really, gap coverage covers the gap that your major medical health insurance does not cover.